There is no insurance company in Holmes County, Ohio, that has ever paid a claim for a barn that burned down on an Amish farm. Not because the Amish do not have barns, not because their barns do not burn. Because when an Amish barn burns, 300 people show up the next morning with lumber and tools and food, and the barn is rebuilt within 2 days. No claim, no adjuster, no premium, no deductible, no coverage dispute, no 6-week waiting period. 300 people in 2 days. The barn is back. That is the system this video is about, not the individual techniques, the network that makes all of them possible, the invisible infrastructure beneath the visible one. The reason a family can build a masonry heater for $50, a cistern for $200, and a mushroom log system for $39. Not because materials are cheap, though they are, because the labor is not purchased from a contractor. It is exchanged with neighbors who will call on you when their system needs building. The knowledge is transmitted from the grandmother who built the same system 40 years ago and is sitting at the kitchen table. The Amish Mutual Aid Network is the oldest and most functional alternative economic system in continuous operation in the United States. It has outlasted the gold standard, the Bretton Woods system, the dot-com bubble, the 2008 financial crisis, and every economic disruption. Without requiring a bailout, a stimulus package, a central bank intervention, or a government program of any kind. It operates on principles so simple and so old that every civilization that survived developed some version of them. Principles that the modern financial system has spent 2 centuries systematically undermining because these transactions generate no fees or interest. The average American household spends approximately $1,400 per year on insurance premiums. Over 30 years, that is $42,000. The Amish family in Holmes County spends approximately $0 on those coverage categories. Not because they are reckless, because the network covers those risks at 0 premium cost by distributing the burden of loss across 300 families. The Amish church district consists of 30 to 40 households. Several districts form a community of several hundred households. Mutual aid covers medical emergencies, fire loss, crop failure, and disability. No formal actuarial tables, no underwriting. The community assesses what is needed when it is needed and distributes the cost according to their capacity to contribute. The system has no name in English. In Pennsylvania Dutch, it is simply called helping. It is what you do. The transaction is not recorded. The premium is not collected. The relationship is maintained. I want to be specific about what this means in practice because the barn raising is the image most people have of Amish mutual aid. It represents only one category of what the network covers. Let me describe a year in the life of the mutual aid network in Holmes County. In January, a family's dairy cow develops a serious illness. 2 neighboring farmers come to examine her. They spend an afternoon. They bring a preparation from their own herb stores. The cow recovers. No veterinary bill. No service charge. The knowledge and the time and the materials are contributed freely in the expectation that equivalent contribution will be available when it is needed. In March, the community holds a work frolic at a farm whose owner has been ill and cannot complete his early spring field preparation. 40 men show up with equipment. The fields are prepared in a day. The ill farmer and his family provide food for the workers. The labor cost is 0. The community cost is a day's work from 40 people who know their own illness will be met with response. In May, a young couple married the previous year needs help building a dairy barn addition. The framing goes up in a weekend. The husband will spend the next 3 years contributing comparable labor to other projects in the community. The accounting is not explicit. It does not need to be. Everyone knows who contributes and who does not. The social fabric of the community is the enforcement mechanism. It operates with no legal structure, no contract, no written record, and no default rate that any insurance company would recognize as viable. Social exclusion is a more powerful incentive for compliance than any legal enforcement mechanism the financial system has developed. In August, a family experiences a house fire. Within 24 hours, the community has organized food delivery and temporary housing. Within a month, the house is restored. No insurance adjuster, no coverage dispute, no 6-week waiting period. The community moves at the speed of human caring rather than the speed of corporate processing. In November, an elderly widow can no longer manage her farm alone. The community begins a rotation of assistants. Different families take different responsibilities each week. That will continue until her situation changes. There is no elder care facility invoice. There is no home health aid service charge. There is community, organized through relationships built over decades of mutual contribution. This network operates at a scale and specificity that a paid service cannot replicate because of 30 years of shared community life. This network is not sentimental. It is based on reciprocity in the economic sense of mutual insurance through distributed risk sharing. Charity flows from those who have to those who have not. Reciprocity flows between equals who each contribute and draw on the network. The Amish mutual aid system is an insurance and labor exchange network for a community of equals. The American financial system has systematically replaced every function of the mutual aid network with a monetized alternative. Insurance replaced community risk pooling. The financial industry replaced community savings. Every replacement generated a revenue stream for a financial intermediary. Every replacement extracted a margin from the transaction that the community-based version conducted at zero marginal cost. I want to describe the lending function specifically, as it generates the most revenue through interest extraction from households. When a young Amish couple needs capital, the community lends it through families with current surplus to families with current need. The interest rate is zero. The repayment schedule is calibrated to the borrowing family's actual production capacity rather than a bank's timetable. A young farm family that has a poor first year is not foreclosed on. The relationship absorbs the shortfall. The farm survives. The banking system's replacement with interest-bearing debt has transferred enormous household income to financial service costs over the last century. A 30-year mortgage costs 50 to 80% of the principal in interest. A zero-interest community loan costs nothing beyond the principal. The lender's return is the security of knowing the network will provide again if needed, and the community's productive capacity is increased. The Ordnung, the body of practices and agreements that govern Amish community life, is often described as a set of restrictions on technology and behavior. What it actually is, in economic terms, is a commons management agreement. It defines which resources are held individually and which are held collectively. It defines the obligations of community membership and the boundaries of community exclusion. It is the operating system of the mutual aid network. Updated by community consensus when conditions change, it is enforced through social rather than legal mechanisms, maintained through genuine belief in the network's value. The economic function of the Ordnung is to prevent the defection problem that game theorists identify as the primary failure mode of cooperative systems. In any mutual aid network, the rational individual incentive is to take from the network without contributing to it. The Ordnung prevents this. The Ordnung uses the social cost of exclusion from a community that provides the most valuable things: barn raisings, marriage partners, and business partners. The cost of defecting is the loss of everything the network provides. No individual calculation in favor of defection survives that cost comparison. The network is self-sustaining because the incentive structure of belonging makes contribution more rational than defection at every point of decision. The modern American financial system has replaced mutual aid with purchased services. You call a fence contractor rather than asking a neighbor for help. You hire seasonal workers for planting and buy eggs from a grocery store. The purchased alternative eliminates the dependency that made the relationship necessary. In eliminating the dependency, it eliminates the relationship and the network. It creates isolation that it then offers to monetize through therapy and social media. Amish financial saving from the mutual aid network is estimated between $90,000 to $130,000 over 30 years for the average participant household. The cumulative cost of replacement is staggering. Insurance premiums alone account for $42,000. while professional services for home repair add another $20,000 to $40,000. Financial services, including mortgage interest and consumer credit, cost an average household $30,000 to $50,000 compared to zero-interest community lending. Together, replacing community functions with monetized services costs the average American household between $90,000 and $130,000 over 30 years. Combined with direct savings, the Amish approach saves $550,000 to $645,000 over 30 years compared to full industrial and financial service dependencies. I want to be careful about how I present this because the mutual aid network is the piece of the Amish system that is least accessible to someone who is not part of an existing community with 300 years of shared history. You cannot build the network from scratch on a Monday afternoon the way you can install a first flush diverter on your downspout or put lime wash on your foundation wall. The network is the accumulation of relationships built over years and generations. It is the trust that develops from showing up when someone else needed labor and knowing that when you need labor, someone will show up. It cannot be manufactured, it can only be grown. But here is what I have observed across every community I have visited. The network does not require 300 Amish families to begin. It requires two households that share a garden and a fermentation culture, and a mushroom log inoculation afternoon and a basement together. Two households that call each other when something breaks and know enough between them to fix it. Two households that share a meal from their gardens and begin the conversation that the network eventually becomes. Every Amish community in Lancaster County and Holmes County began with two households. The families who arrived in Pennsylvania in the early 1700s built their first barn raisings with whoever was nearby and available. The network today is the accumulation of every transaction and skill shared across 300 years of continuous community life. You are not 300 years behind. You are one conversation ahead of where you were yesterday. Let me tell you specifically what building your version of this looks like in a contemporary suburban context. People who watch this series share it with their neighbors. The neighbor watches it. The neighbor calls. They discover that one of them has been making sauerkraut for a year, and the other has been building raised beds. They exchange a jar of fermentation culture for a bag of biochar. That exchange is the first transaction in a nameless network. Then the neighbor's fence needs repair. The person who knows how to fix fences helps. When that person's gutters need cleaning, the neighbor who is good with heights handles it. Neither transaction has been monetized. Both have been recorded in the social ledger that the mutual aid network runs on. Not in writing, in memory, in relationship, in the pattern of reciprocity that builds trust. Someone in the neighborhood has a truck. Someone else has a chainsaw. Someone has electrical knowledge. Someone has plumbing knowledge. Someone knows how to build with cob. Someone makes excellent cheese. Someone has a surplus of eggs in July. Someone processes deer into venison each fall and shares the work and the yield. Someone has a woodlot and a neighbor who needs firewood. The resources are already distributed across any residential neighborhood. What is absent is the network that makes them visible and accessible to the people who need them. The Amish network makes resources visible through the church district structure, the regular community gatherings, and the institutional knowledge of who has what skill and who has what need that develops in any community where people pay attention. The contemporary suburban version of this network does not have a church district. It might have a neighborhood app, a community garden, or a group text. It could be a shared tool library, or simply the habit of talking to the people on your block about what you are building. I want to give you one specific practical starting point: a neighborhood seed and culture exchange. A single afternoon, in a garage or backyard. Households in a 3-block radius bring seeds they have saved, fermentation cultures they maintain, and cuttings from their fruit trees. One afternoon, whatever arrives goes on a table. People take what they can use and leave what they can contribute. No money changes hands. But before the seed exchange, there is something even simpler. A shared tool inventory. Not a formal library, but a single shared document. Post drill, circular saw, pressure washer. These are the tools that every household needs 3 times in 30 years. A neighborhood of 10 households with a shared tool inventory eliminates the rental cost and the storage cost for every specialized tool. The households that own the tools get reciprocal access, and those that don't get access without the purchase cost. The Amish version of this is community equipment sharing. The district maintains shared ownership of equipment too expensive for any individual family. The equipment utilization rate approaches the maximum because it is always where it is needed, rather than sitting idle in a shed. The financial services industry's replacement is the equipment rental market, generating $60 billion from tools sitting idle in rental yards. What happens next is the network. The person who gave you tomato seeds is who you call when you cannot identify a pest. The person who took a cutting from your apple tree is the person who shows up with tools when your fence blows down. The Amish barn raising looks like magic. It is the visible expression of 300 years of smaller exchanges and contributions. Your network will not raise a barn in 2 days, but it can fix a fence this weekend or share a culture next week. The money you do not spend on the contractor who would have charged you for the fence repair is the first dollar that stays in the network. The knowledge you share with the neighbor about the mushroom logs is the first transfer in a knowledge commons that grows every time it is accessed. The jar of fermentation culture that crosses the fence line is the first biological asset in a shared biological economy that compounds freely. The industrial economy wants you to believe that the alternative is poverty and isolation. The Amish demonstrate that the alternative is community and abundance. Abundance in the biological sense of having more than you need because the systems you maintain produce more than you consume. The network distributes the surplus to where it is needed. The surplus is the community is the surplus. They are the same thing. You cannot build that in a weekend, but you can start it in an afternoon. A table in a backyard, some seeds, a jar of culture, an introduction. The rest builds itself if you keep showing up. Drop in the comments whether you have started building this network in your neighborhood, whether you have a neighbor who has watched this series, whether you have made the first exchange, because I want to map where this is happening. In the next video, I am going to show you the specific tool that the Amish use to maintain the knowledge of their network across generations. The document that every Amish household keeps. The record that contains the accumulated practical knowledge of the family and the community. The thing that makes the network transmissible to children. It requires only the decision to begin writing down what you know before you forget it. I want to give you the historical context for why the mutual aid network that existed across most of American life before 1950 was systematically dismantled. It was replaced deliberately, through specific policy and market decisions, by industries that understood what they were displacing and priced their replacements accordingly. The fraternal societies that provided mutual aid insurance to American workers, the Oddfellows, the Elks, the Masons, served 1/3 of adult males by 1900. They provided sickness benefits, death benefits, and community support systems that operated on the same principles as the Amish mutual aid network. No insurance company, no profit margin, no actuary. Just members pooling risk and distributing benefits through democratic self-governance. The commercial insurance industry, recognizing the fraternal societies as the primary competitive obstacle to market development, pursued a 2-part strategy between 1900 and 1940 to displace them. First, they lobbied for state insurance regulations that imposed capitalization requirements and actuarial standards on any entity providing insurance benefits, standards that the small fraternal societies could not meet, without becoming indistinguishable from the commercial entities the regulations were designed to protect. Second, they marketed the commercial alternative as more reliable, more sophisticated, and more appropriate for modern life than the community-based mutual aid. By 1950, the fraternal benefit societies had largely collapsed under the regulatory burden designed to eliminate them. The commercial insurance industry had captured the market. The community risk pooling function was now a product line. The Amish had not participated in any of this. Their mutual aid network operated entirely outside the commercial insurance regulatory framework. Because it had no formal structure for the regulators to target. It remained exactly what it had always been. 300 families who show up when the barn burns. The mutual savings banks and building and loan associations that provided mortgage lending at cost were replaced by commercial banks through regulatory changes. The savings and loan crisis of the 1980s was partly a consequence of this regulatory liberalization. The community institutions did not survive. The commercial banks that had created the crisis received the bailout and continued operating. The Amish community lending network operated through none of this. Their money stays in the community. Their risk stays in the community. Their benefit stays in the community. And their 300-year operational track record includes no systemic crisis or bailout. The industrial economy wants you to believe you need its services because the alternative is poverty. The Amish demonstrate the alternative is community. The surplus is the community. The community is the surplus. They are the same thing. And it starts with one conversation, one exchange, one afternoon with seeds on a table, and neighbors asking the same questions. The barn goes up in 2 days because the network has been building for generations. Yours starts this weekend.